Hello, everybody. My name's Terry Harbort. I'm President and CEO of Talisker Resources, and we're a gold explorer in southern British Columbia in Canada. And we've just put out our maiden resource on the Bralorne Gold Project.
Terry, nice to see you again. I hope you're well. By the looks of things, you're in a hotel room. Are you on the road marketing?
Yes, Merlin, I'm over here for the VRIC conference in Vancouver. Happy to say it's been very well attended, a lot more interest coming back into the gold space, so really good to see that.
Oh, well, there couldn't be any less. My goodness, last year was a real shambles, wasn't it? You could just hear the sound of the bathwater draining out of the sector, and with it went all hope and joy. But at least now the momentum's back, it feels.
Yes, it seems to. I think we've seen a good strong move upwards in the gold price over the last month or so. Certainly, I think post-COVID, a lot of the conferences and marketing have stabilised on their traditional positions. I think both VRIC and also PDAC had moved to a summer show, and I think most of us like PDAC in summer. It was probably a good spot. We enjoyed drinking out on patios and discussing mining. But now it's all come back to a bit more reality, and we hopefully we've got this traditional influx of capital into the mining industry in the first quarter, usually how it's been over the last number of years. So really good to see this gold price consolidating there above 1900 and hopefully moving above 2000.
Hopefully that'll come. I'm certainly a great believer in the fundamentals. One thing, though, that we have seen is that a lot of the gold stocks have actually, they were hammered last year, particularly the junior sector they were between 70 and 90% down. It was absolutely brutal. And we have seen this bounce. Many in the junior sector have come off very deep lows and have recovered. Not the case of Talisker. You put out your news release a few days ago, and you haven't had the response that perhaps you might have wanted on kind of a pretty healthy looking resource figures.
Yes, look, it's everyone went through the same sort of pain last year. I guess we were late with our resource from when we'd planned for it to come out, so we probably had some investor fatigue. We had some institutional selling prior to our resource came out that really capitalized on the resource coming out for their exit. I guess what we're very confident in is the quality of the resource that now builds the base of our company. There's nearly 1.7 million ounces at a good grade. We're well above 6 grams for the inferred, nearly 9 grams for the indicated. So it's a very strong resource and a very good base for the company to be able to build on.
And you drilled a huge amount of, in my mind, it was a kind of a significant amount for a junior company to drill last year. It was north of 100, was it 150,000 meters or something you drilled during the course of last year? Is that about right?
Yes, just shy of 150,000 meters. And we've drilled that sort of over the last 2 years. So it was quite a challenging market to raise capital and drill that many meters for, but we're certainly glad that we got it done. Was challenges that we'd faced with lab turnarounds as well. There's so many delays that really come into punching a resource out. So we're very happy and very relieved to get our resource out the other end with the results that we got.
And were the two, you said 150,000 2 years consecutive, or was that 150,000 over 2 years?
No, over 2 years, so 150,000 meters in total was what we drilled. We had up to 9 rigs the first half of last year.
Amazing. When did the rigs stop? Have you got more drilling to come that wasn't incorporated in the resource? And was that? So that's the first question. Have you got more results to come that haven't been incorporated in the resource?
So our plan was to drill a little bit more. We had a range out to market of 1.5 to 2 million ounces, which was our in situ target range. We would like to do about another 15 or 18,000 meters of drilling and really hit the top end of that range. So we wanted to get 2 million ounces or slightly beyond 2 million ounces was our target. unfortunately, with market conditions, the available capital just wasn't there. So in the end, we drilled the maximum that we could with the available capital, and hit right in the middle of that range. We had a rig that was out keeping our geologists busy, and we'd raise some flow through for that drilling, but it was post the cutoff of the resource. So that will go into our conversion of potential or exploration targets coming up this year. We've got between about 400,000 to 700,000 worth of exploration targets that have drill holes in them, have sampling in them, but just weren't of the drill spacing to convert that into inferred. So that's something that we'll look to do this year. Bring that chunk into inferred resource, and start to convert some of the inferred into indicated. Okay,
gotcha. And what's your cash position at the moment? How are you doing for, after your most recent flow through? What's the balance look like, the treasury?
We've got around the $3.5 million mark in treasury at present.
That should take you through kind of 6 months of this infill work. Is that about right?
Yes. When we start drilling again at site, we haven't kicked off drilling yet. We're just waiting for the resource to finalise down. We're planning our drill plan. We're looking at particularly the conversion drilling, some of that, attacking that from underground. It's a lot less expensive drilling from underground. A lot less drilling that we need to do because we can get right in close to the veins. So we're looking at a much smaller program, but a much better conversion rate.
And so that underground drilling, it can take place from the existing infrastructure from the old mine, which closed in the late 70s.
Yes, well, it's actually from one of the areas where Avino Silver and Gold Mines had production from 2009 to 2016. So it's quite modern infrastructure. It's a drive-in, a decline from surface. So it's where they were producing there. So it's where we have the majority of the indicated resource that we put out last week. So we're looking at extending that indicated, converting both inferred and potential. That's basically a long strike and down dip from there. So very, very well constrained.
Now, whenever I see a kind of steeply dipping vein deposit now with pure gold fresh in my mind, I want to. I get the fear. Oh my goodness, what could happen? Could this be another pure gold? Because when you look at what happened at Pure Gold, it was a mismatch between the ground conditions and they had overbreak, so they had dilution, and their operating costs were too low in terms of their estimates for their cutoff grade, and their feasibility study estimates were above 220. I think they're $223 per ounce were the input for the cutoff grade. It was done at a gold price of $1,250, but the operating costs were quite high. And when I looked through your resource, I noticed that the cutoff grades were, for one area, 2.6 grams per ton underground, and the operating costs, depending on whether it's long hole open stoping or cut and fill, were below $200 a ton. I just wondered whether you'd had that pure gold comparison or conversation internally with the guys putting the resource together.
Sure. Look, there are some very distinct differences between what we have for a resource at Bralorne and the situation that occurred at Pure Gold. We're a long way at this stage from a feasibility. The majority of our resource is inferred, so it's very early stages to be able to putting economic constraints and also mining constraints on the project. One key difference between how we have things and Pure Gold, a lot of Pure Gold's resource stopes were isolated, so there was a lot of development to be done to be able to find where these pockets of ore were. So it was a lot of what we call remnant stoping. So areas that have been mined previously that had material left behind. So a lot of development was required to make it into those areas to be able to access them. Whereas in ours, I think about 10% of our resource is what we call remnant stoping. About 20% of our resource was a long strike from remnant stoping. So we do a buffer of 5 meters around the historic stopes and a long strike. The key thing is about 70% of our resource, Merlin, was basically brand new ore deposit. It was sat in the ownership gaps between the historic mines. So that there basically is no stoping in those areas. So it's as if we've discovered and developed a brand new mine that sat in historic ownership gaps between the other projects. So that's really the main differences between a pure gold scenario, which is a lot of remnant stopes and a lot of development. Development doesn't pay unless you're developing long hole. Long hole's great when you're on a vein. But when you've got to go off vein, it can become very expensive. The recommendations for our mining widths, for our cutoff grades, all came from the external QP based on their knowledge, and it's all under the CIM's REEE, which is reasonable prospects of eventual economic extraction. So I don't really think these are fixed economics that we look at. That they're probably going to change over time, but it just has to provide an inferred category, something that they see as reasonable. So it's something that as we move forward and develop the project into indicated, that we'll revise. Certainly, what we see is when we convert from inferred to indicated, we see a significant increase in the grade. So we see our grade go from 6.5 up to 9 or 10 grams. I guess one of the other big differences that we have as well at Bralorne is how the dilution's managed. We have significant fracture zones or halos around each of the veins that can carry up to 9 grams per tonne, and we see these anywhere from a couple of meters in width up to 40 meters down at Pioneer. So what the key difference there is when we're diluting our rock for mining widths, we're actually diluting it with material that holds grade in it, and our average was 1.5 grams per tonne in that wall rock. So that's a very significant contribution to the minability. When we're diluting the narrow veins, we're diluting it with, on average, 1.5 grams. So that's a big significant difference.
Thank you. That's really, really useful, because I think in one of your earlier interviews, you mentioned an average vein thickness of 1.6 meters. And I don't know, do you have are you using mechanized equipment? Are you taking are you planning on a mining width of 2 or 2.2 meters? Are you aware of, do you have a kind of a planned mine width for your resource?
So all as we have at the moment is something that can constrain the resource. So with CIM, we nowadays have to put mining widths around our inferred resource. It seems very early to be doing that with inferred resource at underground, but it's very similar to open pit, where they do a whittle shell that provides some economic basis to constrain the resource. Otherwise, people can have a little bit of resource here, a little bit of resource there, and it might never fall into a mine.
So it's an optimization you do. The process is stope optimization, isn't it?
Yeah. So we did stope optimization. You aren't required by CIM to do stope optimization. You've just got to prepare some mining shapes. My view was, we've got a very good project. We'd like to show mineability, and we'd rather take a haircut on grade and on ounces and tons at the beginning. Usually what used to happen in the old days, someone would do an inferred resource, and when they'd drill that to indicated spacing and put mining shapes around it, the grade would get cut in half, and they'd lose a lot of ounces. So in our case, we don't really expect that to change much. We actually expect the grade to increase. And any of your viewers who've seen the press release, you see that it goes up with increased drill spacing, and it's much better to have that understanding of the deposit at an early stage. So it's probably a bit too detailed, the work doing stope optimization. But when you've got a large number of veins and quite a large resource, I think it's a better way to go. It's an automated process with the Deswick software, so it speeds up our ability to put these mining shapes. Because to actually do it by hand, I think it'd be a very long and arduous process.
And room for human error, getting everything done. So what you're effectively saying is that by putting on some degree of mining constraints on your resource, that you're already kind of thinking of a mineable. I have to be so careful. One has to be so careful because it's only an inferred resource, but you've already applied a dilution factor to that resource.
Yeah, so we've actually applied two dilution factors. One relative to a minimum thickness of the veins, which we when we model the veins, we have a core of the vein, and then we incorporate dilution material outside of that to a 1.2 meter minimum, and then outside of that we do the external dilution, which is looking at, okay, what's the mining stope going to look like. So the mining straight's constrained by engineering design. So it incorporates wall rock and might cut out areas of the vein because it's defined in rectilinear engineering shapes, as opposed to the geological constraints, which is actually of the ore body. So really, when you see our grades, they've been diluted twice to arrive at this position.
And when you say that you got the kind of the vein core, let's say it's 1 or 2 meters. When you say kind of plus 1.2 meters, is that 60 centimeters either side, or is it 1.2 meters either side?
In this case, it'll be 60 centimeters either side. Well, it depends on the orientation of the vein relative to the mining unit. It might be in the middle, might be on one side, might be on the other. If we're lucky, it'll actually be the whole vein. And we always talk about minimum, but these veins are up to 4.5 meters wide. So the stopes enlarge out to be relative to the maximal vein width.
Was there any long hole open stoping in the historic mining that took place in the 70s, or was that not a technique that was used at that time?
No, not really. It was all pretty well hand mining. A lot of shrink stopage, a lot of cut and fill. There was some long hole mining conducted by Avino in the 2000s, so 2009 to 2016. But really, all that historic mining was very selective. And I think that's why we see that very high original grade, nearly 18 grams per ton. So our expectation is that we're going to dilute that 40 or 50% and end up with the grades that we see, which is sort of 8-9 grams per ton, and that's the grade that we expect going forward. I think it'd be very strange to have a 4 million ounce mine deposit at 18 grams. And not have that reflected in what we're drilling out. They're exactly the same veins. Many of them we're mining along strike in areas where they didn't mine. So really, that's what we expect. The average in situ grades to be close to that historic, and we certainly saw that in our indicated resource. In situ when it comes out was about 17 grams. So very similar to those historic ones, and then we dilute that with modern mining techniques, with long hole stope design, and we see it come back down to 10 grams.
Yeah, gotcha. And can you explain to me how the indicated resources is giving you higher grades than the inferred, and just maybe talk a little bit about the cut, the high grade, the cut applied to high grades. I mean, you've got a whole range of different cuts from as high as 400 down to 31 grams per ton. but how that feeds into the your statistical confidence in applying or arriving at a higher grade for the closer spaced drill holes of an indicated resource.
Yes, look, it all really comes down to the distribution of gold and the nugget effect. So the nugget effect is almost like a clumping of gold, how gold forms, and when we're drilling with inch or so wide drill holes, we may hit high grade pockets or we may not hit high grade pockets. So there's a significant distribution range of the gold. And basically, the more holes you drill, the more likely you are to hit an average. So our population statistics become much more robust the more drilling we have. So there's a factor of 4 increase in drill hole spacing with indicated. So we get a more realistic approach of what that average grade should be. And particularly with our indicator that we've put out here, we had a lot of underground sampling, so sampling across the back in underground workings. So it really tracks a lot closer to what the average grade really should be there. Our capping that we see at Bralorne, we like to do capping in individual projects or in individual sections of the mine, just in case there's some variability there. So we don't have overweighting on one deposit. Most of our resource came from the Bralorne area, about 1 million ounces. So it would weight very heavily on the cutoffs of the other grades, and there might be some difference in orientation or in mineralization in veins in different areas of the deposit. In general, we don't have a great deal of very high grade ore. Bralorne's a very consistent deposit and very typical of a lot of these mother lode styles or crack and seal style of mineralization. It's very consistent. So most of our population sits very robustly under 100 grams per ton. So it's a lot of consistent high grade samples as opposed to a lot of extreme outliers. And perhaps that's one of the reasons, Merlin, why Bralorne was mined for 40 years, because it had very good vein continuity, very robust average grades, and very good down plunge continuity, which we can easily show with historic sampling that was beyond a kilometre. So I think those are really key factors in the geostatistical analysis of the project.
Thank you. That's really, really clearly explained and incredibly helpful. And just to summarise it even further, you for the inferred category, because you're applying these conservative approach, you haven't got the statistical coverage to be able to say it's not 6 grams a ton or 6.5 grams a ton. We can't call it 9.5 to 10 grams a ton. Therefore, we're going to apply these cuts, and we're going to, just for now, until we've got the distribution, a better data set, we're going to call it the more conservative grade of 6.5 grams a ton.
Yes, if you have too many what are called outliers or extreme values, then it can drag your population statistics to the right, and it can increase your average based on just a couple of samples. So really, it's much best in robust statistics to base it on a large number of samples and actually cut out those very high values. Very high values are very flashy in the market when we put out press releases, but the reality is if they don't reflect the averages, the real averages of the deposit, then when you go into production scenario, you're in a lot of trouble, because you just can't reconcile what you think's there. And it can be a very dangerous precedent to have to face.
Good, got it. Now, just as a reminder, so really this becomes a statistical exercise. Once you've understood the geometries, once you've understood the geology, and you've really got a handle on it, which with the pedigree of your exploration team and the amount of work you've done, presumably you're pretty tight on that, although of course there are always surprises that geology can throw up. So now it's a kind of a numbers game, is it?
So really, luckily for us, it's been a numbers game right from the beginning. We target a lot of our original veins on historic drift assays. And we're fortunate to have a lot of historic information at Bralorne. So all of the level plans with mapping, structural mapping, lithological mapping, 45,000 drift assays in a database. So really our drilling was very well constrained before we'd even drilled a hole. So as opposed to drilling and hoping we hit vein targets, we knew where most of these targets originally were. So that's why we were able to put out a resource range. And you'll see many companies that don't know what they have either don't put out a range. There's very famous cases of that. One that's recently bought out without any sort of range as to what they thought was there. But we were able to be very confident in the range that we thought, because we actually were able to model exploration targets or vein targets using this historic work and then target the drilling and drill them out. So much of our growth now, we know exactly how much we need to drill, where we need to drill, the orientation of the veins and the expected grade. So it's been great for us because it's been a very low risk project, and certainly that risk is still low as we go forward. And it's because of a lot of that historic information that a lot's known about these types of deposits, a lot's known about the continuity at Bralorne. It's sort of the opposite to a Rubicon. These veins are continuous for up to 2.5 kilometres along strike. And again, that's one of the reasons why Bralorne was mined for so long, because it was an easy mine to produce. Once you were on the vein, you just kept going.
Thank you. That gives me such a better understanding of the deposit and your approach to it. So that kind of takes us up to here. So what's next? I mean, you've mentioned your treasury, you've mentioned some of your drill plans, but what do you see as your aim for 2023?
So we're in the planning phase now, looking at what drilling's the best to move forward with. We had in our press release a large number of what we call exploration targets or potential areas. Now, these don't restrict what we think's there. We still think that there's well beyond 5 million ounces here following this along. These exploration targets are what we actually put drill holes into. They unfortunately just didn't have the spacing for us to categorize them in inferred or indicated, but they certainly were well constrained. We with CIM rules, you need to put out a range. So we put out, I think, 400 to 700,000 ounces. So firstly, what we'll look to do is convert some of this into inferred. And it's simply a small amount of drilling, because I've already got drill holes in them, already got robust results, and we've already modeled the wireframes for them. So that's a pretty easy conversion to take us to beyond 2 million ounces. We're also planning some increased conversion of inferred to indicated. What we'd like to do is be able to build an indicated bank to be able to show production for 3 to 4 years at Bralorne. Most of this would be focused around where our existing indicated is. We're probably planning underground drilling there from the modern workings that are underground, and really build that strong base to show this is a mineable project. These mineable areas are close to surface, easy to access, limited development, limited cost. So that's what we're trying to show from now.
Thank you. And when you say 3 to 4 production years near existing kind of indicated resources, what do you have in mind as a kind of a production range? Is this kind of an 80,000 ounce per annum mine, or 50,000 or 100,000 ounce per annum mine? Just kind of, I know you haven't done the optimization work, but just as a thumb suck, what does it feel like?
So it all depends on working phases, so probably a little bit early for us to judge that now. We are doing some preliminary mine planning to see, okay, what is the sort of production levels that we can get, and I think that really the project would start off in the 50 to 60 thousand ounce per year production range, and then increase over time. I think a good target to have is to hit that 100,000 ounce per year production. and some of that might depend on what we can develop in our understanding of the more lower grade areas that sit around the vein, so the vein halo areas, to be able to increase potentially our stope width up to 4 or potentially 5 meters. So just to get a lot more volume, and I think that's the catalyst to push beyond 100,000 ounce production. But I think certainly in the early couple of years, you look to stage in and probably transition low scale 350, 400 tons a day, move to 500, move to 750, and then target to get to 1,000 tons a day, so you can hit that 100,000 ounce limit.
Terry, thank you so much. Good luck with the conference in Vancouver. I hope it doesn't rain too much.
Thanks very much. It's actually lovely weather here today.
Oh, good. And good luck with the drilling during the course of 2023.
Merlin, thanks very much. Always a pleasure.